In the past year, crypto markets have been brutal. The largest coins are deeply in negative territory, but one major coin broke the pattern, and it is actually up year on year. That is TRX, the coin behind the TRON network. As a former banker, this tells me that this performance is not due to the market, but the underlying business. So today I want to answer two questions that a banker would ask. First, why did this one coin hold while everything else fell? And second, even after holding up, is it still cheap to buy? But to get there, we need to separate three things: the network, the revenue, and the coin. Let's start talking about the network. We all know Tether, the largest stablecoin by market capitalization, with about 60% market share. As you can see, the largest chain supporting Tether is currently TRON, on which nearly half of Tether stablecoin USDT run, just ahead in the ranking of Ethereum. Tether added USDT to TRON in 2019. At that time, this was a diversification move because they were primarily on Ethereum. At that time, TRON promised extremely cheap and low latency settlement, and that was very attractive to Tether. So USDT grew on TRON because TRON is cheaper and faster than Ethereum, and also flat through congestion. This basically means that fees stay at the same level through volume spikes, while Ethereum runs an auction system that allows, during congestion times, fees to spike. So TRON is one of the dominant infrastructures today, and for a central use in crypto, stablecoins. So effectively, TRON is a core utility within the digital asset ecosystem, but utility without income has limited attraction in business. In finance, where I started my career, I learned to focus on cash flow, which leads me to the second pillar we are analyzing, the revenue. So the question is, does TRON actually make money? In the first quarter of this year, the network generated $82 million in fees. Daily active users rose to a quarterly average of 3.2 million, up from 2.8 million in the previous quarter. That is actually quite impressive, and here is the part that matters for the coin. Those fees are paid in TRX, and a portion of TRX is burned, which means destroyed. In traditional finance, the closest equivalent is a company using its profits to buy back and cancel its own shares, which results in pushing up the price of the remaining ones. So unlike Solana, for example, where there is no burn mechanics, in the case of TRON, there is a genuine link between the growth of the network and the value of the coin. Now let's talk about the coin itself, the last pillar of our analysis. In traditional finance, historical patterns are extremely valuable to form forecasts. If we look at TRON, TRX did have one dramatic moment. In early December 2024, it spiked to an all-time high of about 43 cents. Its first record in 7 years. There were specific news that caused such price anomaly. TRON's monthly stablecoin volume had just crossed $500 billion, and its daily revenues hit a record. But those events were amplified by one specific speculative spark. The TRON founder, Justin Sun, made a high-profile investment in the Trump-linked World Liberty Financial Project just after the US election. This led to the belief that he was entering the inner circle of Trump's protégés. This actually proved to be not the case, as the two parties eventually fell out. And like most euphoric spikes, it faded almost immediately. TRX fell from 43 cents back towards 34 within pretty much a day, as holders sold into the strength. But here is the part that matters. Strip out that one-day spike and TRX never really traded far above the high 30s. Today, it trades at nearly 32 cents, which is only about 10-15% below the best level it ever held for any length of time. Now, compare that to the other coins, measured in the same honest way. How far each sits below the level it actually sustained. Bitcoin is around 50% below its all-time high. Ethereum and XRP roughly 65% below. Solana is over 70% below its peak. Of all the major coins, TRX is the only one still trading near the level it actually held. The decline was shallow and the recovery was sticky because the business never stopped earning. Other chains like Solana saw their revenue model crashing when, for example, meme coin trading pretty much disappeared. TRON demonstrates a stable and resilient model. If the business is growing and the supply is shrinking, the only question left is, does the coin offer further upside? Here's the interesting fact. Even after holding up better than every other major coin, TRX still looks inexpensive on the numbers. Its total market value is about $30 billion. Ethereum is worth nearly 7 times more, but its supported stablecoin market cap is not even double than TRON. yet it's 7 times bigger. So we have TRX that fell the least, that sits closest to its highs, and still trades at a discount to the fundamentals. From a traditional finance perspective, when that combination exists, you have to ask, what risk does the market still price? And does that justify such discounts? Risk 1 is the founder. TRON is inseparable from Justin Sun, and Mr. Sun attracts plenty of drama. In March 2026, he settled a US regulator case after being accused of manipulating TRX's price. He ended up paying a $10 million fine. Also recently, Sun started legal proceedings towards Trump's World Liberty Financial, alleging that the project had locked up his holdings, threatened and defamed him. Risk 2, dependence on a single partner, Tether. TRON's whole thesis rests on USDT. So when Tether freezes funds on the network, as it did in April 2026, locking $344 million linked to illicit activity, it is a reminder that TRON does not fully control its most important asset. Risk number 3, insider supply overhang. A large share of TRX sits with the founder, the foundation, and a handful of whales. Historically, about 45% of TRX supply went to the founder and the project at the original token sale. This concentration means that a few sellers can move the market. Against those risks, here are the 3 reasons they may support coin appreciation. 1. The legal cloud is lifting, and serious institutions are arriving. Anchorage Digital now offers custody for TRX, and TRON joined the MasterCard Crypto Partner Program. Each of these factors is contributing to chip away at exactly the risk that justifies the discount. 2. Cash flows. TRON earned $82.2 million in fees in Q1 2026. It trades on cash flow, which very few coins can do. A lot of coins can only hope for growth, but TRON is one of the few that has really revenues and income potential. And 3, technology. TRON has a fast and cheap tech stack, which is the reason why Tether progressively adopted it over Ethereum. TRON's tech is notorious for its reliability compared to Solana's outage event, and performance that well suits high volume and low price transactions. So here are 3 price scenarios for the next 12 months. The bear scenario around 25 cents. This is the downside floor supported by steady accumulation and that baseline daily revenue. This corresponds to a case when the founder risk flares, the market share keeps bleeding, or the broader market falls further. The base scenario, 30 to 40 cents. This assumes TRON keeps its Tether share of business, and moderate adoption of the chain continues, as in the recent past. And the bull scenario towards 50 cents and a new all-time high. This needs the valuation gap to start closing, a strong overall market, the institutional story compounding, and a diversification of the revenue beyond Tether. So why did this one coin hold while the rest of crypto fell? Because it is backed by a real, profitable, dominant business, and that business keeps earning through the downturn. TRX has behaved like a defensive asset in this cycle. It still trades at a discount to what the network does. The major risks are the founder, the single partner dependence, and the insider supply. Should those move, the discount will close. Thanks very much for watching this video. I have a background in investment banking and hedge funds, and I believe in applying traditional finance principles to crypto without hype or fear of missing out. If you agree on those principles, please subscribe to the channel and put a like on the video. And finally, one disclaimer. This video is intended for educational and informative purposes only, not as financial advice. If you require financial advice, please consult a qualified financial advisor. And remember, every investment carries risk. See you at the next video and take care.